Good morning, Jeffrey Friedman, Senior Commodity Broker with RJO Futures, with morning comments on stock index futures. I usually give the word of the day. I'll have to say the word of the day today is technical, and we'll get involved with that in 1 minute. Let's review what has happened in our economic fundamentally for our economy, which should affect stock index futures. In my opinion, this whole week has been, if you put it in the blender, mix it up, I'd have to say I'd give it a C- or a D+. More negative than positive. Today's reports alone, initial claims for the week jumped up, bigger than the range. The number was 386,000, and that means more people need help. Now, is bad news good news and good news bad news when looking at please, Bernanke, give us QE3. We're not there yet. So he hasn't pulled the trigger yet, but we're fairly hopeful when it comes to the economy, and QE3 would affect the stock index futures dramatically. Looking at existing home sales, 4.37 million. We were looking for around 4.65 million. Another disappointment. Existing home sales. Remember, that's 75% of the housing market. I know that people were talking in great guns about housing permits and housing starts, but that's only 25% approximately of the housing market in general. So keep that in mind. That's a projection going forward of builders, and existing homes is actual what's going on in the housing market right here, right now. Now, looking at Philadelphia Fed, that was a negative 12.9. We're looking for a negative 10. So again, putting it in the blender, another negative economic report, short term. Not a very huge report because it's a sector of the United States of America, not the whole United States, not the whole global, but nevertheless, it was a negative. Leading indicators, negative 0.3, or looking for we were looking for a negative 0.2, so it was a little bad, but not terrible. So now, what does that tell you? Earnings have been mixed to slightly better. We got a pause on Europe. We got a pause in China that I've been talking about. And the stock market is unchanged right at the moment. We had a nice rally yesterday. We had a nice rally the day before. The last time that I did one of these comments, I said that the bulls were in command. They obviously made a newer high for the move in this week alone. So they were in command, and that kind of a thought, going with the majority of the players, worked out. So why did I say the word of the day was? It's really technical. We're in a technical buy mode for right now. We're hitting resistance. I say it's 1375. A lot of people are saying 1380 on the charts. You can see where we failed that before. If we can break through 1380 on a closing basis, then obviously I believe, looking at the charts, we could probably power up to 1397. All I'm doing is giving you support, resistance, peaks and valleys, okay? But the trend short term is the bulls are in command. We are making higher highs and higher lows, and I say go with it till it doesn't work. So right now the bulls are in command on a short-term basis. If we fail, or this resistance around 1375, 1380, we cannot go any higher, then your next thought, looking for support, would be 1356. If we close under 1350, the bears would start to get a lot of good momentum, and that would be crossing over from the 10-day moving average, simple and exponential. As always, please contact me, Jeff Friedman. We can talk about any market you want, on any way you want to talk about it. Long-term, short-term, fundamental, technical, put them together, find out what a good trading plan would be for your risk tolerance. Remember, call me at 800-826-4124. And, as always, trading futures or option to futures involves risk of loss and is not suitable for everyone. Good luck and good trading.